Good evening, traders. Let's get this week's live webinar started. This week, 21st November to 25th November, the focus that we have for this week is three currencies that we are trading, and some of the, in some cases, have already been trading for a while. For example, the Aussie, the Canadian, as well as the most important one, the US dollar. So before I move on into talking about these trades and these currencies that we are looking at, let me just go through roughly some changes that we are introducing to the live webinar. We had received feedback from a few of our students, and just a few weeks ago, that we had a lot of analysis that is too broad-based. So what we are going to look at instead is to focus into some of the currency pairs, like for example, the major pairs, and more directly into what are the trades that we are currently taking or looking to take for the next few days, some even few weeks. So that's how I'm going to approach the live webinar from now on. Okay, so let's begin with the FSI. This is this week's FSI. Basically, FSI stands for Fundamental Strength Index, and what we are interested to look at is a static view of how the economies are actually performing. So very clearly, if you look at last week's FSI, it looks like this. You can pause the video if you want. Basically, if we look, we see that there are a few expected numbers here. Number one, the US economy is strong at 43%. The pound is, and the Canadian is slightly, the pound is slightly to the neutral side. There's not much change, and we see the Aussie and the Canadian being weaker than the rest at -18 and -11% respectively. So how does this week fare? Basically, we see, hold on, I think there is a mistake here. All right, I'm afraid there's some changes to the FSI, but no matter. Let's skip to the currencies. Basically, the FSI is going to give you a static picture, but it's too broad to see anything. Let's just zoom in into the currency itself. For this week, we are looking at three currencies: the US dollar, which we are neutral. We have been calling for a bull US dollar for quite some time now, about 3 to 4 weeks, and finally we have changed our stance. Right before the rate hike, we are actually looking at how US dollar is actually neutral. We'll explain why later. For Aussie, we are slightly bearish, and for the Canadian, surprise, we are bullish. And these are our reasonings. Now, US dollar, as I mentioned just now, is one of our key focus this week. One of the reasons is because the US dollar index, the DXY, has finally breached through the 100 level, testing a major resistance at 101.5, and that's a lot. So if we look at the chart, right now it is at 101, 199, and historically speaking, we have never actually seen how this DXY broke through the 100 level. Now I'm looking at the week chart here, and you can see that this level here at 100 is seldom broken through so decisively and lingers there so long, because this is a level where it is considered a major resistance. We always expect that price to be rejected here. So what are the implications? If this level holds, the 100 level, we would potentially see more upside to DXY, and hence all the major pairs that involves the US dollar. But if we see a rejection coming down decisively, like this bar here or this bar here, then we would see this DXY going further down, maybe going back to the previous support level of 93.2. So this week is all about the dollar. So if we see this bar here coming down and decisively breaks through, gets rejected by the 100 level, we will see further downside. If it holds at the 100 level, we will see potentially upside. So what does the fundamental and sentiment tell us? That's what we are interested in. So this gives us an opening to see if there is any short US dollar trade that we can potentially take this week. All that comes later is to see if there is a good timing that combines fundamental and sentiment. So from fundamentals standpoint, definitely we are looking at strong US recovery, and because of this strong US recovery, the rate hike by the end of this year, the December rate hike, is almost certain. to a certain extent, it is 100% increase in rate. The market is pricing in about 96%, and you can see that that has already played out within the markets. Or the US dollar pair has strengthened significantly over the past few weeks, and the FSI has successfully captured that trend. You can see that the green side, it actually shows that there is a expansion, and the rate side is contraction. And over the last few months, US has been recovering strong, and there's very little reason for Yellen not to hike rates anymore. Even Trump couldn't stop her. So this more or less confirms the trend for the end of this year. And what does this COT tell us? For those who are not familiar with COT, this is a good chance for you to get to know this COT better. As I mentioned in all of our FSA classes, COT is not something that you look at that will play out immediately over the next few days, but more or less over the next few weeks or months. So the COT right now is showing us that there is a lot of there is less bullishness compared to what has transpired over the last few weeks. So there's this number here, which you might find confusing. You can pause and you can stare at these numbers for a while. But we summarize what we have as findings for this week for you in terms of US dollar, right? So the long and short positions were both covered last week. This is obvious. Net positions remains positive at 48K, down from 52K last week, which means there is less bullishness. Okay, so it was 52K net positive, and this means that the bull run. This confirms two things. There's the bull run from the last few weeks, last few months, and there is going to be some form of bullishness in the next few days to weeks, because it is still at 48K net positive. But this is an interesting one. Open interest dropped from 85K to 81K. This tells us that yes, it is bullish, but it is now less bullish. If we look at this chart here, you see that the OI has dropped from 86,000 to about 81,000. So this change here shows that there is actually less gas stepping on. So that bullishness that we as mentioned just now is actually now almost coming to an end, which kind of makes sense fundamentally. The market must be pricing in that the fact that the rate high is now 96%, almost certain, right? So this is making sense to us. 52-week range is now higher than average, implying that there's a significant weekly change. Now, what this means is that if you look at this number, 7.79 here, it shows you how significant is it, the change in COT. All right, so in our FAC classes, the fundamental analysis and sentiment analysis, we mentioned that not all COT makes sense. And if they don't make sense, we want to find those that make sense. So one of these data here that tells us which are these currencies COT that make sense is this 52-week range. If it's above the average, which is right now at 7%, it shows that there's a lot of movement going on for the US dollar. So this tells us that right now the change within the market itself, combining the OI and the net positive position, is actually almost coming to an end. Hence our conclusion that there is a fall in bullish conviction. It is now less bullish. This forms our directional bias for the next few weeks, meaning to say that if there is a good US dollar short, we might want to take it. So what are the risks to a dollar trade? As I mentioned just now, we are actually neutral on dollar right now. Yes, I said I wanted to short this dollar, but for the time being, we are not seeing how much this US dollar can move, right? So if you are going to trade the dollar for the next few days from 21st to 25th, this week, which basically this week, you might want to take a notice of these few things. Number one, the dollar news, which means the US news and the data release. If there's something that comes out that is considerably bad, which is, I think, highly unusual, Yellen might change her mind. And I'm not just talking about financial or economic news. It might be political news, for example. Of course, I'm referring very not subtly about Trump. If let's say he does something that is out of blue, something that is out of the usual, out of convention, Yellen might change her mind about raising hiking rates this year. And of course, I shall not talk too much about this. It's a lot of conjecture. Doesn't help us, but creates a lot of confusion per se. So I'll just stick to the usual conclusion here. Hike is almost certain, which means it is roughly priced in within the markets. I am now looking for a sign of technical reversal. Going back to this chart here, this DXY doesn't stay long at a 100 level. Either it gets rejected and goes back down, and challenges the support at 93.2, or it goes up further. We are not sure what's going to happen, but definitely if you take a long US dollar trade right now, my friends, you're a bit too late. We've been calling that for the last 3-4 weeks time. You should have taken it by then, right? So this is US dollar. Let's talk about the Aussie. For the Aussie, we are slightly bearish, and the bearishness has actually already played out as of now. So the FSI is actually contracting. But to a lesser extent, you would see that there's a trajectory here. The trajectory actually shows that there's improvement from the last few months. Now, this happened and occurred during the August to September period. It's pretty low. But compared to the March and April period, it has actually improved a lot. Obviously, this is because of China's economy's expansion. The trajectory is overall positive, and right now it is stabilized around the 12% figure. I'm hoping to see that it goes up to neutrality, which is 0, and further up, because Aussie and the Kiwi has a lot of potential to go in the next few months. Because their economy has been facing a downturn, we are actually expecting a recovery soon. But until that happens, let's not rush into any long Aussie or long Kiwi trades, right? So overall, still in the contractionary zone, but has been improving for the past few weeks. It is now less bearish. This is from fundamentals point of view. Let's talk about the sentiment, which is the COT. The long and short positions were both significantly covered last week, and this is the COT for this week. We put it nicely for you. You can pause and take a look if you want to. We are looking at the 15th of November here. So you can see this is now the net position at 41K. The OI has dropped from last week. And let's take a look at what's our conclusion here. The net position remains relatively similar at 41K, not much change. Open interest dropped from 137 to 113. So for those who are not familiar with COT, this is very significant, which means the bull run that we have seen previously is now coming to an end. You can say that this is actually, from COT's point of view, a very bearish move, and we actually see that happening. The sell-off has actually already happened since last week, but of course it did happen to a higher magnitude than we expected. But it was very fortunate for us that our Aussie USD trade worked well for us. COT index remains at an overbought condition, implying that there will be a potential reversal soon. Now, what do I mean? The COT index, as mentioned in our class, means that when you lay out all the net positions of Aussie COT from 3 years ago to today, we can see that there is a lineup of all the way from the most net negative position all the way to the most net positive position. So when you lay out that range, we want to see current net position. Where does it stand? So if it's above 50, it is positive. If it's below 50, it is negative. The closer it is to 100 points here, the most positive it is. So if it's 100 points, it is the most positive that it has ever been. If it's 0, it is the most negative it has ever been. So for this COT, 87 is a pretty high mark or point per se. But if it's now 87, we can see this COT index like some form of RSI. We think that it is now more or less overbought and it's time for a short, which means it could turn bearish very time soon. So this is why we say that it is now at an overbought condition, implying that it's a potential reversal soon. One of our key reasons why we are slightly bearish on Aussie. 52-week range is very low, insignificant weekly change. Basically, this is nothing much to show, telling you that there is not a lot of changes within what's happening for the Aussie. So not much to share there. Basically, if you are shorting the Aussie like us, there are a few things to take note of. Number one, there is no impact news this week. If you look at Forex Factory, no rate news, that means there is no catalyst for Aussie move. Now, if that happens, basically we are just hoping that the technical analysis, which is the trend trading, the momentum will further bring us down to a new low for the Aussie move. But take a look at the Aussie USD. If you are trading the Aussie USD major pair, the US dollar is now the key driver, not the Aussie. If the US dollar strengthened, it would weaken the Aussie, which means Aussie USD is bearish overall. But if the US dollar, as what I mentioned just a few minutes ago, if US dollar reverses the uptrend and now DXY goes back, gets rejected, the Aussie USD will strengthen and Aussie will strengthen as a result. This gives you a Aussie short risk. But of course, without the rate hike, there's a few more days, a few more weeks to the actual rate hike. I'm not seeing how the US dollar would actually reverse right now. Fundamentally, there is no reason for that, unless, as I mentioned just now, if there is a unprecedented or there's an unanticipated move from some political factors and things like that. So we are still pretty comfortable with all a US long right now. Still looking for a US short, but I don't see that happening anytime soon. So from COT's point of view, Aussie is looking at how it has been strong for a while, and now it's actually moving towards a more bearish zone. So if those who are looking to short Aussie, you can start looking for technical entries now. Finally, we have the Canadian dollar. The Canadian dollar shows that FSI is now more or less bearish, but if you look back, the trajectory is more or less sideways. I don't see how the fundamentals for Canada is actually a big driver for the Canadian dollar right now. We probably want to take a look at more of the oil market in order to give us a better entry. From the COT's point of view, again, it's lackluster. Long positions were added and short positions were covered last week. So what do I mean? Take a look at that. So basically, this is last week's COT. We can see that the negative net position is still negative. The OI has gone up a little, indicating a very slight increase in interest, and there is not much change within the entire COT itself. COT index is more or less neutral at 53. These are our conclusions. You can pause and take a look. Net positions remains negative but reduced from 21K to 18K. That's neutral to me. Open interest increased from 120K to 125. Again, this is neutral to me. Not much news. 52 range is relatively low, implying a less significant really change. Nothing much, not much changes. And so why do I talk about Canadian dollar? The reason why I talk about Canadian dollar is because later when Kyle is going to cover the technical side, we are actually looking for opportunity for a long Canadian trade. And if you look at the chart right now, although there's nothing much happening right now, we do see that there's a very high potential for good trade if, let's say, this long Canadian works out. But again, as I mentioned just now, if you are looking to short this particular pair, you are actually doing a US dollar short. So this ties up very closely to our dollar trade. And we are not seeing how this short of Canadian-US, the US-Canadian will play out in near term. It will most likely have to wait until the rate hike at the end of this year. The reason why we want to talk about the Canadian is this final slide here. We are looking for a CAD long, but what is it that we're waiting for? As I mentioned just now at the first of this webinar, we are actually looking at how we want to trade in the market for the next few weeks, specifically at the Canadian right now. If you are looking at the US oil, if it drops up to about $39, which we believe is a very strong support, we believe that the oil will rally strongly once if the $39 is being rejected and doesn't fall further, it would be supported well there. And when there is a strong rally in the oil, this also means that there will be a strong rally in the Canadian market. This is one of the key reasons why we are looking for a Canadian long in the next 2 or 3 weeks or so. Secondly, the BOC is also looking to normalize monetary policy. Right now, they are very dovish. They are looking to have taper. They are looking to have a rate cut. They are looking to have a stimulus. But if the economy works well for them, which I believe would bottom up soon, the dovishness will change into a hawkish tone. And when that happens, that would also be a strong rally in Canadian dollar. So we're looking at these two key reasons for a Canadian long. If that happens, plus all the technical signs, we will see a very good risk to reward trade coming from US Canadian dollar. So that's all for us for this week. If there are any questions with regard to any other currencies that you might be interested to trade, let me know and I will see how I can do a quick analysis on the currency that you want me to share about. If not, we shall take a quick break. It's now 8:20. Kayan will be back with more technical analysis, more of what I have just shared with you, the US, the Aussie, and the Canadian dollar, and what is it that we are looking at, the key levels you can trade on. And based on all this information, you can also watch these levels so that you can take these trades together with us and make money together. Yep. Any questions, you can feel free to write here. Hold on, let me just see where I can actually do your questions. Yeah, there you go. Right, so you can actually type your message here. Hi, guys. Right, so if you have any questions, please feel free to ask. We shall take a 5 minutes break. We'll be back at 8:25. We'll talk about technical analysis for the coming weeks and a few weeks' time. I shall pass the time to Kayong. See you at 8:25.
Okay. Okay, I think we'll start. All right. Okay. Any take on Euro Yen? Okay, we'll go through Euro Yen as well, right? But I'll do something first. And what I'll do is, if you realize this week report, right? In the FX Edge report, I believe all of you will be able to download this, right? You either receive it through email, number one, or another way you can actually access it is go over to this web page called alphaplay.com.sg, all right? /students, right? I believe all of you would have the login information already. So what you need to do is you just log in, all right, and then click onto members area, right? And you actually can go on each week, all right? We do upload here as well. So you click into it, and then you just click download full report. It'll be link where you have all the information for the particular week. Right, so that's how you can get access to this report. All right, we did do some slight changes to it. Okay, so what I want to share is quickly walk you through how you can use this report to benefit your trading. All right, if you haven't read through it, we would strongly advise you to do that because there are certain reasons why we decide to change the overall structure of this report. Right, it's actually to facilitate and help you in your analysis. So you can see that we actually break it into individual currency. Of course, the first thing you need to take note of is when you trade FX, it's important to take note of the dollar index. All right, so that's why we put it over here, the first one. Right, so what we changed was that we actually make it into individual currency. All right, so you can see we talk about dollar, we break it into technical, fundamental, and sentiment for the dollar, and then and vice versa. Right, so you also realize that the technical analysis that we are sharing with you right now has some slight changes, and this is where I'll just do a quick sharing with you that we are actually looking into using wave analysis to forecast certain direction of the market. Okay, and that's where we also decide to share the update and as well as this analysis with you guys. All right, so you can see on the chart itself, we always drop some info over here, right, telling you the potential scenarios. And if you go into, I'll use Euro to share view. Right, we mainly share with you two time frames of chart. The first one is on daily. Right, so giving you a rough perspective of what's happening. Right, so you can see over here on the daily perspective on euro dollar. Right, this is the forecast that we have. All right, we expect price to dip slightly further, and then eventually we'll see a rebound from here. Right, meaning euro dollar would potentially turn and reverse to the upside. Right, but of course we don't trade on the daily time frame, so that's why I also included in terms of a 60-minute hourly time frame. So it's a smaller time frame analysis. You can see here as well. All right, some of the notes that we wrote in: 60 forming a bullish divergence. Wait for the break of this downward trend line. All right, and potentially then that's where you can look for a potential buy setup. All right, you can see over here, we also included a trade plan for this week. The idea here is, I wrote down, be patient and look for buy setup after the impulse break. Okay, so again, don't use this report as if it's like a signal service, but this is an technical analysis report to show you high potential, high probability where the currency pair is going. Okay, so for example, this one euro dollar, there's a high probability this trade, this currency pair, the price will go higher from here. Okay, so with that, then that's where later on I'll walk you through some of the application that we have as well in terms of update. Okay, so take note of this report, how you can start using it. All right, we added in more comments, charts, as well as in terms of fundamental comments, as well as sentiment, some comments. Right, so if you are a very conservative trader, right, you want to have the sentiment comment, in terms of bullish or bearish to be aligned. That means you can see for euro over here, technical wise is saying that we are looking for upside. Fundamental side is also bullish, and then sentiment sides we are also seeing some sign of potential bull building up. Okay, so you can see euro is actually a very confluence trade because the fundamental, technical, and sentiment are showing sign of a bull building up. Right, so that's where I want to quickly walk you through how you can use the technical analysis change in the report to help you in your trade. Right, so I also walk you through the live chart. All right, what are some of this? So I'll walk you through euro dollar. All right, so you can see as we analyze, all right, as the market develop, you can see price did eventually start moving up already, right? But it's still not this because Monday, all right, market is usually very quiet, it's slower. So we're actually just being patient and giving more time for more confirmation. Okay, so we want to see price break, touch this trend, and then retraces. That's where we look for an entry right there, right? I'll update more on how we're going to share with you if we entered certain trades. All right, we are using the Slack app. All right, so hopefully all of you guys who are here in this webinar are already inside. Later we'll update more on how you can also make use of that platform, right, and follow us closer, and then benefit along the way as we go. Right, so before okay, so since we have a first request on euro yen, all right, I'll just walk you through on euro yen first, and then I'll go back and analyze some of the other pairs that I intend to share with you for this particular week. Okay, so again, euro yen. Now before we go into the patterns directly, okay, I want to walk you through in terms of wave analysis. It's not a strategy, but it's a forecasting method. Okay, so the difference between a strategy and a forecasting method is that a strategy is something that you use to decide where you want to enter and exit. All right, a forecasting method or a forecasting methodology is to help us to identify where is the high chance that price is gonna go towards. All right, so I do not want you to mix up between strategy and forecasting methodology. Right, so over here, what we are doing here is that, why do I have this thing? Okay, ignore that notice, right? But basically, in terms of euro yen, okay, the forecast methodology is telling us that high potential that euro yen, right, the perspective is still going to go higher. Data on free plans update once a second, super chat. How do I get rid of this thing? Okay, so the idea here is that on the daily perspective, the forecast is telling us that euro yen can still go higher, right? And of course, this is just a forecast. It's not going to be 100% thing, but just that very high potential yen can go as high as 121. Okay, so right now it's trading around 117.7, so it can go as high as 121. All right, and of course, price doesn't go in one direction up. It's gonna go retrace, go up, retrace, go up, retrace, go up, retrace. But eventually, the forecast is telling us that price that is gonna reach at least 121, and the minimum requirement over here is that it's gonna break the 118.45. Right, I won't be able to cover this methodology of forecasting in this webinar very shortly like this, right? Because it takes a lot of understanding, and I basically cannot cover the methodology of how to do it in. Okay, so this one we're gonna share with you more going into 2017, all right? But as of now, we're just going to share with you the result or the outcome of the analysis as we go, all right? We won't share with you the process of how to do it. So in terms of our outlook on euro yen, okay, we are looking at this, we are bullish, right? Meaning I'm expecting more upside towards euro yen. This is on the daily time frame. So I don't trade the daily, so that's why I go down to either the 4-hour or the H1, right, to look up for opportunities, right? So because I'm expecting price to go up, okay, and it's not going to go up in one straight direction. It's going to go up, retrace, go up, retrace. Okay, so this is where we adopt again the forecasting methodology, right? We are expecting price to hit the 118.70 area, and then that's where you're going to start to turn. Okay, and this turn is a retracement, and it's going to give us some opportunity to take in terms of the upside. Okay, so from there, that's how you can do is you go into, let's say, H1. Okay, and now since the methodology the forecasting methodology is telling us that it's going higher, right? We want to look for any potential setups that we can take for long, right? And as of now, right, you just look at this H1, right? It's very clear cut that this time frame is also showing you an uptrend, right? And what you learn in the strategy is that in an uptrend, you just need to identify higher high, higher low, okay? And that will give you a potential setup, right? And this is called a strategy. Basically, you are finding where you're going to enter that trade, right? So now you identified these 4 points, basically 1, 2, 3, 4. Okay, it's an uptrend, and what you need to do is you just pull in your fib for that confluence. All right, over here you can see that this structure. Okay, let me just click OK. This structure over here, you can see a confluence with a 38.2 Fibonacci level. Okay, but I always share with you guys that I don't like to take 38.2 because of the risk to reward ratio. Okay, because if I enter that trade over here, okay, my risk has to go below this 100. Okay, my reward, if I just aim for this, you can see that this risk to reward is less than 1:1. It's in fact, it's only half of my the reward is only half of the potential risk that I'm going to enter this trade, right? So that's where then I do not want to take this kind of risk to reward trade. Okay, so what I want to do is I'll be patiently waiting for price to at least go lower, okay, maybe towards the 61.8. okay, and then that's where I would have a better risk to reward ratio. Okay, you can see it's at least now above 1:1. Okay, so this is the minimum target. That means your TP1. Of course, just now I mentioned that price has the potential to reach, okay, on this time frame daily, all right, I share with you that price has the potential to reach all the way to 121, all right, or even break above 118. Okay, so what you can expect is that if you enter this trade, you actually can write, all right, your TP. That means you take first target over here, you leave your remaining position, all right, aiming all the way higher up for as far as you can. But of course, you need to shift your stop loss to break even and protect your capital as it goes according to it. All right, basically, if your trade position is really profitable, you want to ensure that you approach it, right, using your stop loss, shift it to protect your capital and etc. Okay, so this is the outlook and my take on euro yen. Okay, we are still expecting more upside, so look for opportunity and set up to enter on a long position. Right, and of course, if you are trading on smaller time frame, we do have patterns forming as well. Let me just go down to 15 minute. Okay, 15 minutes is not good. 1 hour here. Okay. Just clear everything. For those who are sharp, okay, if you are focusing on this area of the chart, let me just highlight to you this area. All right. So of course not 15, maybe 30 minutes. Can see that clearer. Okay, sorry, let me bring back that highlighted area. Okay, I'm giving you time to actually practice to see you are able to spot, quickly what is happening and what potential setups you can get. If you are watching this recording, right, or such, okay, you can pause the tape and then look at this chart, see if you can spot any potential setups. Okay, so if you are quick over here, some of you might be able to already see it as well. Okay, so what you're seeing here is you always look for swings. Okay, you potentially can see this swing happening within this time frame. All right, and then right now price is coming down. Okay, so just now we identified that we can take a 38.2 confluence over here for structure trading. But if you the risk to reward, okay, you can potentially look and pattern forming over here. Okay, so what you need to do is, of course, measure your fib, okay, to see if there is any ratio to 1 for 1. You see that the extension comes in between 1 to 1 and 1 for 1, and it never closed above the 1 for 1. Right. So quickly to recap, what pattern would you be able to see? Right, if price extension C point comes in at 1 to 1 to 1 for 1. Right. So for those who are quick and can recall, this is actually your cipher pattern. Right, and cipher pattern comes in at 786 completion. Okay, so you are expecting now price to complete this pattern to give you an entry to take a long. Right, again, if you long over there, your risk to reward will be, of course, better than you long it at 38.2 structural trade. Right, so with this, your take profit, there's many ways you can set it. Okay, one is use the simple pattern take profit using 38.2 and 61.8. Okay, so you have your first target here, a risk to reward of about 1:1, and then your second target is over here, giving you a risk to reward close to 1:2. And of course, this is only a usual method to trade the pattern, right? If you are using the overall direction, you can even aim for up here for your TP2 and even higher, all the way to 121, which we analyze in terms of our forecast for your even fourth target. Okay, so this is how you can use the forecast analysis that we shared over here in the report. Right, do not use this as your entry reason, but use it as an overall directional guide. Okay, go down to your trading time frame, spot for any valid setups and strategy that we have shared with you. Okay, for example, this one, it's cipher pattern. Okay, make sure you have a valid setup based on your strategy before you take that trade. All right, so you can see this gives you a potential completion of a cipher over here, 116.6. That gives you a valid entry to take that trade. All right, hope it's clear. Give a simple breakdown of how to read your way. Okay, so we have a question. Okay, asking possible to give simple breakdown of how to read your analysis, help you understand. Okay. Yes. Okay. So hopefully, this sharing that I just went through with you, basically using the analysis, all right, that's over here. Okay, this one I didn't have Euro Yen, right? But let me go over to. Okay, what I want to share with you. Okay, since this is okay, a bit disruptive, but let me just walk you through everything that we have updated, so you guys have can benefit fully from everything that we have updated recently. Okay, so I would assume all of you have access to this portal. okay, what you need to do is click onto a members area. All right, the FX Edge report is this report that I just show you just now. All right, it covers basically the fundamental, technical, and sentiment of the major currency itself. All right, so basically euro, dollar, pound, yen, Aussie, Canadian, New Zealand. All right, so what we shared under this, all right, on the daily watch list. Okay, some of you might have clicked and watched it before, some of you have not. But right now, every day, do it, okay? Because what is going to include it, what we've updated is that I have included all the currencies in my watch list, all the setups and forecasts that we are looking out for. Okay, so if I bring you to Euro Yen, okay, so you can see that I always do a daily, right, plus a 240. All right, Monday I'll share with you the daily perspective because that gives you the overview of what's that week, right? So this, how you can use this is that on a daily perspective gives you the overall direction based on technical analysis, overall direction where this currency pair is going. Okay, so if you look at this Euro Yen daily, I wrote here daily is in a correction structure, expecting the wave to complete around 121. Okay, so overall perspective, the direction we are expecting is Euro Yen is gonna hit as high as 121. Okay, it's not a guaranteed thing, but that's an expectation, a forecast that we are expecting. Then you go over to this next one, which is a lower time frame, either a 60-minute time frame or 4-hour time frame. What you can see is over here I also wrote 240, which is your 4-hour time frame, in a third wave up, expecting to complete around 119.4. Right. So I also share with you this trade plan here. I say look for short-term buy setup. Okay, meaning short-term, you want to look in your trading time frame, either H1 or H4, look for opportunity that allows you to buy the Euro Yen. Okay, so which I walked you through just now on 30-minute or even just now on H1 time frame. These are example of how you can look for buy setup. Okay, so over here, I share with you short-term look for buy setup. This is what I just did. Okay, look for entry reason to buy the Euro Yen. Over here, you also see that I wrote medium term, look for short setup. Why do I say look for short setup medium term? Is that if price reaches around the 121 area, okay, that's where you want to turn into a potential seller, meaning you want to start look for opportunity to sell the Euro Yen. Okay, when I mean medium term, I'm referring to at least 1 to 2 weeks ahead from now. Okay, so for now, short term, all right, just focus on the short term, which is looking for buy setup, which is what we did, all right, for the past 5 minutes. All right, hope that is clear to you how you use that wave analysis. All right, I'll walk you more example later on. All right, but let me tackle your question here as well. The question here is that there is also a Gartley pattern on D1, all right, for Euro Yen to short. So under this kind of situation, what do we do? And when you mention positive, can still go up. Okay, let me go over to daily and see where the Gartley pattern is. Okay. I would assume this would be your Gartley pattern. Yep. Okay. I think we are seeing the same thing. This will be your Gartley pattern. All right. So it will complete around 121.8. All right. I suppose your Gartley you're referring to is this. All right. Am I right? Did I see the same Gartley as you did? Okay. So how do you deal with this situation is that you realize that I forecast that it can potentially go as high as 121, but I did mention that it's not a guaranteed thing because in trading, I cannot guarantee you anything. I can just show you the high probability things that's going to happen in the market. All right. So the idea here is because this is a daily, right? My advice to you is be patient. All right. Wait for price to hit higher first because from now to 121, okay, now it's at 118. That's about 300 points, right? It's gonna take some time, at least 2 to 3 days for price to eventually hit that level, okay? And depending on how price hits that level, you want to be very cautious because this 121 and 120.9, which is your completion of the Gartley, is very close. Okay, so potentially price can really hit your Gartley here and then turn. Okay, so the idea here is because it's a daily perspective, 10 pips in a daily time frame is nothing. It's very, very small. All right. So the idea here is if you spotted this Gartley, all right, and then with this over here, right, you can see that it's very, very close. Okay, so that's the part where if these two things confluence, all right, you can see that I'm saying that this is where you want to look for short opportunity. This Gartley is your valid reason to take a short over that. Okay, so I hope this becomes very clear. So use the wave analysis as a directional bias. Okay, so once it hits this level, I'll be looking for a short, but I need a reason to take a short trade. And then this Gartley pattern over here, okay, gives me that reason to take that short. Okay, because without a strategy, I do not know where to put stop loss and etc. So you need this kind of strategy to give you a very clear where you're gonna enter, where you're gonna exit if you get it out wrong. All right, so hope it's clear. Oh, you didn't spot the same pattern. Okay, can message me later so I can walk you through your pattern and see if you spotted it correct. But this is a very obvious Gartley pattern. All right, so let me walk you through another case study of how to use the wave analysis to help you in your trading. All right, so now take a look at okay, let's take a look at euro dollar. Okay, so euro dollar over here on the daily perspective, I'm saying that daily is hitting the bottom. All right, expect price to hit lower around 1.0530 to 48. All right, and look for that rebound. All right, basically look for opportunity to buy euro dollar if it comes lower. On a 60-minute hourly time frame, we are looking at price already having a divergence. And then I wrote here 60 forming a bullish divergence, wait for price to break the trend line for a confirmation of it going higher. Okay, so I wrote here trade plan here is be patient and look for the buy setup after it broke the impulse. All right, so I'm going to show you updated. That was done on weekend. So today you can see what's happening over here. Right, on a 1 hour time frame, right, price has broke that small trend line. Okay, what we are waiting for is for price to at least touch here. This is going to happen tomorrow. Very high chance it's going to happen tomorrow. Price is going to go higher, right? And then after that, when it comes down, you want to look for an opportunity to buy over here. Okay, I can show you how you can look for that. All right, this is again a forecast, a methodology to show me that the direction of euro dollar high chance is going up. So I need to go over to my trading time frame to spot for any opportunity that I can look for a buy setup. Okay, so first you go over to H4 to see if you can spot for any buy opportunity. All right, basically H4 you might not see anything, but let's go to H1. Okay, so look at this H1. Again, if you're watching this recording, pause the tape, see if you can spot anything. All right, if you're watching it live right now, I'll give you a quick few seconds to see if you can spot any potential setup that you can take. All right, the three strategies that we taught you: pattern, counter trend, trend following. Right, the three strategies. See if you can spot which one you can put here for your entry reason to take the trade with the direction of the forecast. All right, I'll give you a quick few seconds to look through. Then I'll tell you the answer. Very good. All right, so one spotted divergence. Yes, you do have a very clear divergence happening over here. All right, so you can see RSI prints a higher low, price prints a lower low. Okay, so this is very obvious divergence. The neckline is over here. All right, so that's why I say right now price hasn't been very firm yet. All right, so that's why I share with you here. Wait for price to go higher first, and then when it retraces, that's where you want to take a trade. So over here, don't take it first. Wait for tomorrow. Okay, Monday market is very quiet. It's not going to move much. Wait for it to give you more signal. Go higher. When it starts to turn, that's where you want to look for opportunity to trade. All right, and you have a potential divergence setup. Okay, so depending on where price is going to end tomorrow and start turning, all right, you pull your fib accordingly. Look out for the 61.8. Okay, so when it does comes down, all right, towards this, that's where you can look for a buy entry setup, all right? This is gonna be a very valid setup. Your stop loss below it. First take profit, this one. Okay, second take profit, use your Fibonacci extension. And then if you want to go for a home run, basically you just want to hold that trade as long as you can. Okay, fall back to this analysis, right? And I share with you over here, it can go as high as up to this upper trend line here, which is about 1.14. Okay, so if you get into this trade and then price really move in the direction as what you have anticipated, meaning it goes higher and higher, hold that trade, write it until 1.14. Okay, that is about that's more than that. That's about 800 points, all right, 800 pips, all right. So trade like this, you just need to take it once a year. It can give you a very good return already. All right, so I hope it becomes very clear right now how to use our wave analysis, okay, to help you in your trading. Again, this distinct between a forecast methodology, right, and a trading methodology, right? The three strategies we teach you is a trading methodology. The forecast we'll share with you more next year, okay? But the forecast is more of the overall direction where price is going, right? So I hope this, again, with this sharing on euro dollar context, right, it becomes very clear how you can use it. Okay, so if I walk you through another one, let's look at pound dollar, right? So pound dollar over here, daily, okay, I state that daily is in a correction, possibly reaching completed, all right, and it can still reach as high as 2860. Okay, so the idea here is if it goes up to 2860, I'll be looking for a short setup. All right, this one you can look at the 4-hour time frame. My forecast here is that if price respect this level, which is 1.2333, we can expect it to go higher, right? As long as it's respecting this level over here. Okay, and I wrote here the trade plan is wait and see how price forms, right, at the start of next week, which is today. All right, if support holds, price can go up towards 2775. All right, so let's take a look at what's happened for the pound dollar for today as price opened. Right, so you see this happening. Okay, the support over here, as we mentioned, 1.2333 holds. If this holds, all right, we can expect price to reach as high as 2.775, right? 1.2775, right? So again, this is a forecast, okay? So it's a forecast that if it breaks this trend line, it can go up, right, to 2775. But the idea here is, do you have a potential valid setup? All right, so that's where you need to go over to your trading time frame, look and see if you have any setups that you can take for a buy trade. All right, so if you look at this, right now, this, even though some of you might say that this is a divergence, all right, strictly speaking, it is not, because this is a low, this is a higher low. Your RSI, this is a low, this is a higher low as well. Strictly speaking, this is not a divergence, right? So what you need to do then is wait, be patient, all right? Wait for that setup to come to you, all right? Price can do this. It goes higher, it comes down. Okay, from here, what you have is you already have a 1, 2, 3, 4. Okay, so if you can't see it, you have this low, this high. It comes lower. Now it goes higher, all right? So it does have a uptrend forming, right? So if you are trading hourly, all right, based on this chart, wait and be patient for price to form a higher high, higher low. Take that trade from there. If you are trading on a smaller time frame, let's say 30 minutes, okay, you can already look out for that potential setup, because you can see this area over here, price has broken it. Okay, so you already have a very early sign of 1, 2, 3, 4. Okay, then what you need to do is, with a structured trade strategy, pull in your FIB. Okay, look out for that confluence. Again, this confluence should come in about 50 to 38.2. Okay, it's actually more accurately is at 50. Okay, so you can see with this, you can wait for price to come down over here. Take that long trade only if price comes down. Right, your stop of course needs to be below this. Your target can be here for first. right? Second target, use your 127 extension, and then of course your third target, you can go for the home run of 1.2775. Right, all clear? Any questions you want to ask regarding how to use, right, or you want to clarify how to use the wave analysis that we shared over here? Adopt it to your trading strategy that we taught you, right? The 3 trading strategies that we have taught you, right? Apply it into it and then write for that overall direction over here. Okay, then I'll walk you through another case study on Aussie dollar. Okay, this is a very interesting one because we managed to catch it at 773, right, which is somewhere up here at the top, all right, and right now we are still riding it. We are expecting it to at least touch 7090, all right, so it's a very huge run up to now, all right. Of course, move your stop loss to break even and even more, all right, protect your profits as price goes accordingly. Right, so I'm going to show you is daily, all right, gives you a rough idea on where the price is going to go. Okay, so when it touches the 7090, that's where you want to look for a bullish reversal. Okay, so once price comes down around this region, you do not want to take any short anymore. Right, look for the opportunity to take a reversal trade to the upside. And then we of course break it into 60-minute as well. 60-minute, we tell you that it's in the third wave down. Expect a correction and then a last wave down, right? So we expect price from here to at least do a correction because I share with you that price cannot go in one direction, go straight down like this. It goes in up and down, up and down, up and down. All right, so right now we are expecting it to retrace up towards this region highlighted, all right, 7435 to 75. We tell you that the trade plan for you or Aussie dollar for this week is the same. Look out for potential of this ending and then trade it. All right, so we say that if price retraces next week can still look for a short-term sell towards this area, 0.716. And then from there, you need to start to look out for a potential ending and then take that reversal trade up out here. Okay, so I'm going to show you what happened on Euro or Aussie dollar right now after the week. Okay, you can see now it's starting to retrace. Okay, so we can expect this retracement to go as high. Okay, again, it's not a guarantee thing, all right, but we can expect it to go as high as around here, 7435. So once price touches here, okay, we are going to look for any setups to short it. Okay, so if I go over to that time frame over here, okay, I'm still expecting it to go higher first, okay, before we look for an opportunity to short, right, around the 7435 area. So if I drop a horizontal line, 7435, right, somewhere around here. So can you, once price touches here, look out for a setup to sell it. Okay, that setup can be a structural one. Let me just clear this. Just now I shared is 7435, right? 7435 to 75. Right, so this is the area. Okay, so if you look at this, structure-wise, you do have some setup as well, right? You can see this, it comes down, it consolidates, and then it goes down again. All right, so you have 1, 2, 3, 4 as well. So what you want to do is see if when price comes up over here, this entire area, all right, is a wide region, is about 70 pips, right? See if you have any confluence over here. Okay, if you pull in this fib, you might not get anything. Okay, even at 786, I don't think you have a confluence. All right, so this is a very tight. All right, basically, if price comes up towards your 786, you can still see a potential structure set up. All right, this is your previous structure, fib confluence of 786. Okay, your stops can be very tight, just above this high, which is just above the 7500 level. Right, how it looks like is like this. Short here. All right, your stops just above, your target can go. First TP is here, it gives you a very good risk to reward already. And of course, if you're riding for that home run towards the 7160, right, you can aim for all the way down here, 7160. Right, you can see this kind of risk to reward, 1 is to 4 point something, it's very decent. Okay, so again, I'm showing you example of how you can use the forecast, right, to match it with a strategy, and then you take that trade. Don't just base on the forecast and then blindly enter the trade. Okay. Any questions that you guys have? Okay, so I'm currently showing you how to use this FX Edge report to your advantage. All right, of course, you don't want to just focus on technical, right? Look at fundamental as well. You can see that fundamental overall is still negative, all right, but it's showing you less bearish. Okay, so what is going to happen is that perhaps when it touches this low over here, the 7160, okay, your fundamental outlook might support for the buy for that reversal. All right, it keeps improving. By then, your fundamental might turn into bullish. Okay, and if you look at sentiment, we also say over here, net overall position, not much change, but sentiment drop in the OI indicates a sell-off. All right, so Aussie is still selling for sentiment. Okay, so that's why right now you do not want to look for buy in Aussie first. Just look for sell. All right, for the short term, just look for selling in Aussie. All right, so I'll leave some example for you to walk through in this FX Edge report. Okay, but what is going to include in this, just now I walk you through. All right, you go over to alphaplay.com.sg/students under member area, click onto the daily watch list. You can see over here we have the entire list of portfolio that I'm trading on, right? Aussie, Kiwi, all right, Aussie dollar, dollar index, Euro, Aussie. You can see all the pairs in my portfolio I'll be putting up over here. Okay, so you can use and adopt the same methodology that I shared with you. Basically, use this as a forecast. Go into your trading time frame, look for that strategy that we have taught you. All right, use the strategy that we have taught you. Find a reason to take the trade according to the direction of that forecast. All right, don't just blindly enter that. All right, let me just walk you through some interesting one. Gold, all right, a lot of people might be interested in gold. Overall here for gold, all right, daily we are expecting that somewhere around this region, right, around the 1211, 1205, around that level, all right, or even 1200, daily time frame, all right, we are expecting a bounce all the way back up. Just show you what's happening in gold as well, huh? All right, so it's still moving sideways, not much, all right, but we are expecting from here, price can go as high as at least towards the top of this downtrend over here. All right, that's the minimum expectation. All right, so if you are looking for this, what you can do is go down to lower time frame, H1, spot for any opportunity that can gives you the reason for entry. All right, as of now, yep, you do have a divergence. Okay, wait for that neckline to be broken. All right, so this one we analyzed, I think, some time back already. All right, wait for that neckline to be broken. Wait for this to happen. All right, price move higher. It breaks. It starts to show you sign that is coming down. Okay, pull that Fibonacci out and measure that 61.8 level. Okay, then that gives you a reason based on a strategy to enter a long on gold. Okay, so you long here. The stop loss, of course, below this. Okay, your first target is over here, a very healthy one. 1:1.4. That's your TP1. Your TP2, you can use 127 extension. And then, of course, the third one, you can go for that home run all the way up to 13111 or 13157, around that area. All right. So that's how you can quickly couple the analysis that we share with you on the website, okay, and use it to couple it with the 3 strategies that we taught you. Okay. So again, a lot of all this analysis are done very in depth already. All right. Though you just see that there are a few lines inside it. Make sure you read this text over here. Okay, because this text is my thought process. All right, my trading plan for it itself. Right, when I mean wait for the break to the downside, I'm simply telling you to wait for at least a trend line to be broken. All right, so if you look at oil market, okay, I'll just update you on what's happening in oil. Oil actually gap up today. right? So that's why you need to be patient on trading it as well, right? So this one is wait for the break. What I mean for wait for the break to the downside is at least wait for this to break, meaning price to break this low. That's where you can look out for an opportunity to take a sell, all right? And again, this is not a strategy. You need to fall back to the strategies in order to take that trade. Okay, so as of now, because of this gap, right, just be patient. If price come back down, then you look for that sell. If not, just wait. Right, just wait for that sell, because very high probability oil prices still needs to make this dip, right? Based on this forecast, it still needs to come down first before the uptrend is going to continue, right? So on the longer term time frame, this is what we are looking out for oil. Okay, it needs to come down towards the 39 area before a next up move that is going to be very strong, right, towards 58. Okay, so you do not want to miss this. Wait for price to dip, then you do not want to miss this buy over here. Any questions? Okay. For Canadian, fundamental indicates bear, but technical says strength. Okay, let me walk you through. What day? Oh. Okay. You look at this, right, Canadian. When we do technical analysis, right, when we do each of this analysis, I wouldn't say just technical. When we do technical, when we do fundamental, when we do sentiment, what we are doing is we are using that and just do our analysis based on that. Meaning when we do technical analysis that time, I don't allow myself to be affected on what's happening in the fundamental. And then when I do fundamental analysis, I do not let my technical point of view to be affected. Okay, so what I do is I'll look at fundamental, I'll look at purely fundamental, and then when I look at technical, I'll just look at purely technical. So sometimes you can get like this, meaning technical telling us that it's strengthening, right? Because we are looking at the dollar CAD, right? So when dollar CAD goes down, Canadian needs to be strengthened, right? So this one technical is telling us that either dollar is going to be weakened or Canadian is going to be strengthened, right? But if you look at fundamental here, yes, it is slightly bearish as of now, but you can see it's actually rotating expansionary, contractionary, expansionary, contractionary. So overall, right, it's actually almost like very close to neutral. It's hovering up and down, up and down, up and down. Okay, so but right now, as of last week, right, the data points to slightly bearish. Okay, and then you can see over here sentiment. I say not much changes in sentiment, right, but the overall net is still negative. Okay, so this is where you can look that technical is telling us that it's going down, all right, meaning Canadian is going to go strengthen, but at the same time, fundamental and sentiment is not supporting that. Okay, basically, it's not all three aligned. Okay, so what you need to do is that if you're a conservative trader, wait for all of the three to be aligned before you take that trade. Okay, so what it means is that right now you might not want to long Canadian because your fundamental and your sentiment doesn't show that as of now. Okay, so I hope that answers your question. Right, so if you're a conservative trader, don't trade the Canadian long. So just be patient, wait for it. Okay, let's take a look at what happens to CAD as of today. Okay, you can see it's coming down slowly now. Right, ourselves, we are not in this trade. Okay, we are not in dollar CAD. Basically, I miss it when this happened. When it touches the 786, I didn't manage to catch it. But we are not in dollar CAD, so we are just expecting this to come down. Okay, but you can see fundamental and sentiment wise not fully supporting of shorting the dollar CAD, meaning not fully supporting a buy on dollar CAD yet. Buy on Canadian yet. So be patient and wait for those to be aligned. All right. And of course, when you are trading the majors, right, because dollar is involved, just take note of what's happening in the dollar index. All right. So this one is also in your report that we shared. Right. Dollar index, what we are expecting, right, is for this to happen. Okay, we wrote here two scenarios. Sorry, in the report. Okay, let me walk you through. Dollar index will be interesting because this week we have FOMC meeting, right? So, but I don't expect much volatility from that meeting, right? Just take note of it if you are trading much on the dollar, right? So we have two things that can happen. Number one is if it's a sharp correction, right? What we mean by sharp correction is that from here, okay, on the daily time frame, sharp correction means price does this, okay, almost a V shape, up V, inverted V, sorry, right? This is a very sharp correction. So what I wrote here is that if it's a sharp correction, okay, it is signifying a potential reversal back to 91.90. Okay, so if we see this in the next few days, all right, basically tomorrow or up to Thursday, basically most of this week, if we see is a sharp correction like this, high chance price is gonna do this. It's gonna retrace after this sharp correction, and it can go down all the way to 91.90. Okay, this can happen for first scenario. Second scenario over here, if it is a shallow correction. So what I mean by shallow correction is this. Corrects very shallow, right? Based on the angle. That means it goes down a bit. Okay, this is what I meant by shallow correction. It's signifying that we are going for an up impulse move towards 106.20. Okay, so if price does this, you are going to expect price to go higher after that. Okay, so this is the key. Keep a lookout, keep a very close lookout in what's going to happen in the dollar index, because depending on how it's going to play out for this week, right, is going to be crucial into the next move for dollar. Okay, so if it's the first one, okay, you can look out for to sell the dollar, which is if you don't trade the dollar index, then look out for the major pairs. All right, you want to sell the dollar, right? That's where your euro dollar buy is gonna come into play, right? And if it's a shallow correction, you want to be very cautious, because your dollar index is gonna be strengthening. Okay, and then you want to be aware of this if you are trading any of the majors as well. All right, so that's what I mean by shallow and deep correction, right? So take note of that as well. Okay, hourly, how dollar index is looking out right now is that we do have a divergence up there, right? And price has break below this, all right? But again, this is Monday market. You can see this movement is so small. Wait for more information, right? What we need is, if it's a sharp correction, it's gonna go like this. Okay, that means next trading session tomorrow and Wednesday, price is gonna go like this. Then that's a sharp correction. Then that's where you can start to look to sell the dollar. Right. Any other questions that you guys have? Okay. Again, go to this website. Let me just drop you that link. Go to this website. Okay, that's where you can find all the analysis under the daily watch list. All right. All the analysis is very much in there already. Okay, you can see that if you look through it, all right, it's all inside. Okay, look at. Oh, okay. Okay, so for example, like some of this, right? I'll walk you through. For example, some of the forecast is like, let's say pound yen. Okay, we are expecting it to go higher on the daily perspective. All right, so I wrote here daily possibility in a structure now in C wave. All right, so the upwards target is 148.20. Right, it's pretty high up right now. It's just at 136, so a lot of room for it to go higher. Right, on a 60 minutes time frame, this is what we are expecting price to do. All right, I wrote here 60 minutes seems to be forming an ending. Expect a corrective impulse down after this completion. All right, my trade plan that I share with you here is look out for the potential short setup. All right, if this break. So the idea here is, if I walk you through pound yen. Oops. Okay, this one. Okay, I'm expecting this to happen, meaning when I trade plan here says that look for short setup, I'm waiting for this to happen because price has moved so much higher. Okay, it needs to come down. Basically, every up move there needs to be a retracement. Okay, so I'm waiting for price to break below this trend line over here, and then I'm gonna look for a potential short opportunity. Right, so what you can do is you go over to your trading time frame. All right, see if you can spot based on the strategy. See if you can spot any setups. All right, if I look at this, we might not have a pattern. Let me do a quick measurement. Oh, okay, we do have a butterfly on a 60-minute time frame. Okay, so again, you spotted an opportunity to look for a sell, right, at 138. So price can still go higher and touch your entry, and then it can turn from there, right? But this is something that you need to do. Basically, you need to look for an opportunity based on the strategy, look for an entry reason to take the trade, okay? But of course, if price don't go up, all right, but it decides to now come down like this, then what you can do is wait for structure, okay? Because we do not have any counter trend set up, wait for structure to happen, right? So basically, if price comes down, you need to wait for at least 4 points, okay? Your 1, 2, 3, 4 structure trading strategy before you can take that trade. Okay, so you have here come down 1, 2, 3, and then when it retraces back up, you can potentially take that trade over here, this level. Okay, so what you need to do as a trader is always plan out what are some of the potential scenarios that can happen in the market, okay, and then prepare yourself for it so that when it happens, you know exactly what you're gonna do, how you're gonna act on it. All good? Okay, if all good, I'll walk you through the last thing, the administrative stuff, all right, on Slack, because we're gonna use that pretty often from now on. Okay. Okay, so again, if you guys are here in the webinar and not in the Slack, just drop me a text and then I'll add you in that group. Okay, in Slack, basically we have multiple channels, all right, depending on what are some of the courses and master classes that you have attended. But basically, if you are in this webinar, right, you'll be added into the Forex Winner Circles, all right? So if you're not in this channel, let me know, all right? I'll add you guys in. What we're going to do in this channel is I'm going to drop you on a daily basis, all right? Just now I shared with you this one, all right? The daily watch list, all right? Everything that you see over here. I also drop some charts over here, as you can see, all right? So it's actually the same charts, all right? Depending on which one you are more comfortable, you can do look out, all right? If you're using a com, you can go to this web page to get access to those charts. If you're on a phone, you can do so on this app. Right, and you can see this app can also be used on your com itself. Okay, so we use this channel to talk anything about the webinar and such. The recording once is up, right? You can actually also find it over here on our website. I also update and let everyone know once the recording is up on this app, right? So basically, this channel, what is going to happen is we're going to talk everything about webinar, everything about the wave analysis and all the analysis that we have done, right? Feel free to talk about here, right? And you can see that also from time to time, right? I'll update you guys that some of the trades that we're gonna take, right? Aussie yen, I've shorted. If price rally higher, okay, towards 18175, we'll be looking for another opportunity to take the short trade, and I'm gonna just share with you quickly why we shorted it and why we are looking to take those trades. All right, so over here on this forecast analysis, what we're expecting is price is gonna go down from here. Okay, so you can see daily completed this, expecting one more down move towards 70.9, 60, minute wise, all right, is already showing a sign that is potentially turning. All right, see this structure is forming, is potentially turning downtrend. All right, and what is the trade plan is look for a sell setup. Right, so what I did was wait for this retracement towards the 786. Okay, this is just a simple structure setup, 1, 2, 3, and then when it comes back down, comes back up, retrace towards the 81.75. Okay, I'll be taking for another short. My stop is going to be just very tight, just slightly above this high, right, 81.95. Okay, so this is the reason why I'm taking this trade. My target, I'm going to leave it very open. I'm aiming for as low as actually 79446, right? So I'm going to take some profits from here, and then potentially I'm going to hit that home run for 970.95. Okay, so this is what I'm going to share with you, all right? In this app, we'll also be starting to post some of these trades that we monitor and take, right? Some trades that we feel is very interesting that you might be interested to take a look out for as well. All right, all good. Any questions, any last questions that you guys have? Okay, if not, we'll end the webinar here today. Okay, what I want you to do is go and look through again on the report, go and look through the members area, all right, and then look out on all the, scan through all the analysis that we've done, right, and see how that can help you. All good? All right, so with that, we'll end this week's webinar here. The recording will be up soon, and then once it's up, I'll just update all of you again. And then if you want to rewatch, you can rewatch and recap some of the things that we've walked through today. All right, so good night to everyone. Again, have any questions, feel free to ask us. Anything you want to clarify, also feel free to ask us. All right, see you guys.